What's going on, guys? This is Andy here. Welcome back to the Andy Kandola Show. So we got a lot to cover in today's video. I'm going to go ahead and run through 5 stocks and 5 REITs that I believe are better than Realty Income Corporation. Now, Realty Income Corporation is a very popular REIT and they're a commercial retailer and they basically own commercial real estate. But I'm going to share with you guys 5 stocks that I believe that are a better buy right now than Realty Income Corporation. Plus, I want to go ahead and run through my portfolio and give you guys an update as far as where my portfolio is. We'll run through some of the dividends that I got in the last week, as well as some of the trades that I'm making today. I have 13 trades that are scheduled for today, so I want to run through that as well. And then lastly, there is a disconnect between the economy and the stock market. The stock market has just been climbing, and right now the Dow Jones is sitting at about 26,500. So while the stock market is going up, the economy has not changed, and if anything, the economy has only gone down. So I do want to go ahead and share with you guys an interview with Lindsay Bell from Ally Invest, and she's the chief investment officer there. So I want to share her opinion on this and then give you guys my take on that and just go over why I see such a big disconnect between the economy and the stock market. But now let's go ahead and get started. As far as my portfolio goes, my portfolio is currently sitting at $30,330. Now I focus on dividend-based stocks in my portfolio. So all the stocks that I currently have in this portfolio are purely dividend-based. Now in this portfolio, I am up overall because the market has just been rebounding. So I'm up $2,457 or 16% in the last year. If we look at the last quarter, I'm up the same amount at $2,457. That's because this portfolio is quite new and I just started this dividend portfolio in the last quarter. In the last month, I'm up $2,529 or 12%. In the last week, I'm up $1,068 or 3.88%. And then in the last day, the market was down, so I'm down $61.30. Now, if I just look at the dividends in this portfolio, I have had some dividends come to me in the last week. So some of the dividends that I got in the last week was from Visa, 18 cents, from SJW Group, which is a water utility company, 55 cents, from Aflac, $2.46. So those are some of the dividends that I just got in the last week. Now personally, I love focusing on the strategy of dividend-based stocks because to me, whether the stock goes up or down, it doesn't really matter because I'm looking at holding these stocks for about 20 to 25 years and I'm just looking at building additional passive income. So now let's go ahead and jump into the stocks that I'm going to be buying today. Now I have 12 purchases that I'm actually going to be purchasing today. Now with the 12 purchases, these are all stocks that are basically paying out dividends, and the 12 stocks are going to equal a total of $700 that I'm basically investing in this portfolio today. So the first one is going to be PPL Corporation, which is a gas and electric utility company. Next is going to be Aflac. Aflac is an insurance company. They primarily focus on health and life insurance products in the US and in Japan. AT&T is a wireless communication company. They're one of the largest providers as far as wireless communication goes, and so is Verizon. Additionally, I'm purchasing Main Street Capital, which is a business development corporation, and they basically invest in different companies. Johnson & Johnson is another household name in the healthcare sector that I'm purchasing today, and they have multiple different products that they own. Apple, I'm sure we're all familiar with Apple, but I'm purchasing additional shares of Apple. Dominion Energy is another one that is in the gas and utility sector, so I am purchasing additional shares of Dominion. Cisco is a consumer staple. They basically have distribution as far as food distribution, plastic product distribution. They're a huge distributor in the consumer space. Home Depot is a consumer discretionary and they basically sell home improvement products. Costco is another wholesale brand and they're basically the largest company when it comes down to groceries, and they do have a very cult following, so I personally really like this company. And then Altria Group, I'm personally just investing more into recently because of their high dividend yield. Long term, I'm not sure about their strategy, but they are very solid when you look at their balance sheets and as far as as their cash flow goes, and they do pay out a pretty solid dividend as well. I believe it's right over 8%. So these are going to be the stocks that I am looking at purchasing today. I'm not selling anything. I actually haven't recently sold anything, but that's just to give you guys a summary as far as where my portfolio sits right now. Now let's go ahead and jump into the 5 REITs that I believe are better than Realty Income Corporation. And the first one is gonna be Federal Realty Investment Trust. Now, Federal Realty Investment Trust is a commercial landlord. So they do have a very similar model to Realty Income Corporation, but with Federal Realty Investment Trust, they've actually been in business for over 50 years, and they are considered a dividend king, meaning that they've been paying out dividends for the last 50 years. Now, Federal Realty Investment Trust does own a lot of plazas, and basically a lot of the plazas that they have grocery stores, restaurants, and many other mixed-use spaces. So this is one of those stocks that did get really hit with the pandemic that's going on, and because the whole real estate economy did get hit, their stock is actually pretty low right now. But if we just look, they've been growing consistently for the last 50 years, and they're basically one of the industry leaders when it comes down to REITs and when it comes down to having a commercial landlord. Plus, with Federal Realty Investment Trust, they have been growing their dividends for the last 51 years, and the dividend growth rate is at 4.64%, which is a really healthy dividend growth rate. Plus, with REITs, the nice thing is they have to pay out 90% of their net earnings. So in this case, Federal Realty Investment Trust pays out about 73.9% of their earnings, which is solid. And if we just look at their payout ratio, their dividend is 4.43%, which is their dividend yield. And based on the current stock price, that equals $4.20 per share. So I personally really like this company because they're currently priced pretty low based on where they've been sitting at. If you just look at their last year, they were consistently priced at about $125, and right now they're under $100, but the stock has been slowly climbing up. So right now I believe this is a better buy than Realty Income Corporation because this stock is in the same sector, but this stock is currently cheaper and it's a better buy. Okay, but next, let's go ahead and jump into the next stock that I like better than Realty Income Corporation, which is going to be Prologis. Now, Prologis Inc. is an industry leader when it comes down to owning logistic facilities. Basically, if we look at Prologis, they are the world's leader when it comes to logistic real estate solutions. They own properties that are primarily focused around logistics, and one of their biggest tenants is Amazon, and another big tenant that they have is Walmart. Now, these companies are all about logistics, basically being as efficient as possible when it comes down to packaging, shipping products, having everything organized in warehouses. And with tenants like Amazon that have long-term 30 to 50 year leases with Prologis, I don't see those companies going anywhere anytime soon because I think it's all about the logistics. At this point, a lot of companies are focused primarily around logistics. Now, Prologis did take a dive when all the other companies got hit as well, but if we just look at their trend for the last year, this company was consistently growing, and when everything crashed in the market, Prologis did go down, but right now it's actually rebounding back to its highs. So over the last 1 year, they've been up 19%, and year to date they're actually up 4.72%. And the nice thing with Prologis is that they actually started paying out dividends 7 years ago, and if we just look here, they've been consistently growing their dividends for the last 7 years, and they're growing it at roughly a rate of 9.94% for the last 5 years, which is an extremely good pace, and that's right around 10%, so that's extremely good. As far as the payout ratio goes, they're paying out 64% of their net earnings, and their dividend yield is 2.49%. But next, let's go ahead and jump into the third stock that I like better than Realty Income, which is going to be DLR, which is Digital Realty Trust. Now, Digital Realty Trust is basically one of the main players when it comes to data centers. They're basically one of the largest companies in the United States when it comes down to owning data center real estate. Now, with Digital Realty Trust, they are in 20 countries and they have over 275 data centers. Plus, they have a lot of tenants that are some household names and that are some of the top 500 companies, include IBM, Facebook, Oracle, Verizon, Uber, Comcast, JP Morgan Chase, AT&T. So they have a lot of companies that they have contracts with. And with a company like this that owns the real estate for data centers are basically going to be something that's just going to grow over time. And I don't see data centers going anywhere anytime soon because we are going to need more and more storage facilities for data when it comes down to everything going in the e-commerce space. So I personally really do like the stock. And if we just look at this stock and their price for the last 3 years, the stock has slowly just been climbing. Now right now the stock is priced at about $139 per share, but in the last year the stock is actually up 14%, and if we look at the overall year, they're up 18%. So I do like the stock, and the stock does pay out a pretty solid dividend as well, with a dividend of 3.27%, and they've been growing their dividends for the last 15 years at an average pace of 5.41% in the last 5 years. So this is another great company that I like to diversify in within the real estate investment trust. But next, the fourth company that I have on my list is going to be CCI, which is Crown Castle International. Now CCI is one of the largest companies in the United States in cell towers. Basically, they're one of the largest landlords when it comes down to cell towers, and they're working with some of the biggest tenants out there, which include AT&T, which includes Verizon, which includes T-Mobile. So they have some of the largest tenants when it comes down to cell towers, and because 5G is rolling out soon, this is a company that's ahead of the curve when it comes down to 5G, and because of that, their stock price has been climbing as well. So this is a great company to diversify in when it comes down to cell towers, and they are one of the leaders in that space. Now if we look at their stock price has still been climbing, and they did take a little bit of a dip as well, but if we just look at the last year, their stock price has slowly been climbing, and right now it's actually hitting new highs. They're currently priced at about $168 a share, and in the last 1 year they're up 24%. So that's really solid. And just looking at their dividends, this stock has been growing their dividends for the last 5 years, and their dividend is currently 2.86%. So I do like the stock as a long-term stock to hold into the portfolio, and I do own the stock in my portfolio as well. And now the fifth stock that I personally like better than Realty Income that I own in my portfolio is going to be a little bit of a boring one, but sometimes the boring stocks are the ones that can actually pay you out the most money, which is going to be Public Storage. Now Public Storage is a storage facility company, and they basically own real estate in the storage facility sector. So they have self-storage facilities, they have business storage facilities, they have climate controlled storage facilities, and they also have vehicle storage facilities. Now they are one of the largest storage facilities in the US, and they're a very safe dividend stock as well. Now with Public Storage, if we just look at their last 6 months here, their stock has been climbing, and now it looks like it is rebounding a bit as well. Their stock was up to $225 at one point, or $230 right here, but now they're right around $200. And if we just look in the last year, they're down about 18% as well. And they actually pay out a decent dividend as well. Their dividend yield is 3.99%, and their payout ratio is 75%. And if we look at their last 5 years of growth, they've been paying out a dividend of 7.39%. Now their dividend growth did change because they kept their dividend consistent at this point, but prior to this they were actually on a 27-year growth streak with their dividend. But I don't see their dividend going anywhere anytime soon because it's one of those companies that's very safe at this point, and they've just been consistently paying out a solid dividend. And if we look here, they've been growing their dividends, and just in the last 3 years they've had their dividend consistently right around that $8 amount per share. Now guys, these are going to be the 5 stocks in the real estate sector that I personally like better than Realty Investment Trust. Now personally, it is always good to diversify yourself, so I do like to diversify myself, and I do own Realty Investment Trust in my portfolio, but I do own all 5 of these stocks as well. But next, let's go ahead and jump into what's the difference between the stock market and the economy. Basically, why is the stock market climbing when we're not seeing any changes in the economy? So let's go ahead and look at what Lindsay Bell has to say about this. She is a chief investment officer at Ally Invest.
Stock market and the economy, they don't always mirror each other. And that's fine. That's how markets work. That's how you find investing opportunities, right? But this one just feels a little bit more, it just doesn't feel right. It feels a little more off than normal. And look, I think the market, a lot of what's driving the market has been the historic amount of stimulus that the Fed and the government has put towards combating the coronavirus pandemic, which has really been great for risk assets like stocks. But on the other side, just like you mentioned, we are 3 months into this pandemic. 22 million people are still out of work collecting unemployment claims. We heard that yesterday.
So now, to Lindsay Bell's point, it just doesn't feel right that the stock market is climbing at this point when the whole economy is still flat and basically businesses are still shut down and all these different things that are going on in the economy. Now, here's the thing, guys. My personal take on this is that the stock market is always future looking and it's forward looking, and the economy is backwards looking. Basically, the economy is looking at what's happening today and what's happened a couple days ago, where the stock market is looking into the future at least 1 year down the road. So it's already considering that we have a cure for this virus that's going on and that the economy has gone back on track. So now, given all of that, I do believe that there's still a huge disconnect there. But unless there's bad news that comes out, I don't see the stock market going down anytime soon. Now, yes, there could be a lot of other bad news that could happen. We could see a second wave of this virus that came around. We could also see some of the earnings when some of these companies report their earnings at the end of the second quarter or the third quarter or the fourth quarter. I do believe the stock market will eventually go down again. But as of right now, we've just been getting a lot of good news in the last couple weeks. Now, there was a good article that came out in the CNBC that talked about the huge disconnect between the market and the economy, and it's basically talking about how the S&P 500 is now rebounding. The NASDAQ has already rebounded, and now we're seeing new highs in the NASDAQ, and we've seen a rally since our downs and the bottom of the market in March. At this point, we're seeing a rally in the market, and that's all because the stock market is just future looking. So that's just to give you guys my take in regards to where I see the stock market at. And at this point, if you are investing in the market, obviously invest cautiously, invest with monies that you can afford to lose. And my strategy, guys, has always been to dollar cost average into the market, where I focus on investing a certain amount on a weekly basis into the stock market to go ahead and build my portfolio. And if you do want to follow me on this journey, I do have a link in my description for my Patreon account where you can sign up and basically see all my alerts whenever I buy or sell a stock, and basically just keep up with me in regards to my portfolio. Now, additionally, if you are interested, I do have a link for M1 Finance where you do get $10 free to sign up, and at the same time it does help me out as well, where I do get $10 as well as being an affiliate with them, but that does help out the channel. But guys, that is basically going to be a wrap to this video. If you do have any questions or comments, make sure to leave them in the comments below. And additionally, if you are new to my channel, make sure to subscribe to the channel down below. And if you like videos like this, make sure to give it a thumbs up and hit that like button. But thank you guys for watching this video. I will see you guys at the next one.